Joining us now, Adena Friedman, President and CEO of the Nasdaq. So many places that you just start where you want to start, and then I'll ask you some specific questions about things that the commissioner said. Well,
the first thing I think we all have to recognize, and I do think the SEC recognizes as well, is that we are the best equity markets in the world. And our equity markets are a product of incredible competition. And that competition has been created by the SEC itself. So the SEC framework that we operate under results in tremendous competition. You know that we compete for every listing, but we also compete for every order that comes into our market. We have about 20% market share in the trading of U.S. stocks today, and we compete with 3 other exchange groups as well as 30 other broker-dealers for that order flow. And on the back of that, we innovate, and we do a lot to make sure our systems are resilient and as strong as they possibly can be. And we create a lot of value on the back of that. And therefore, we charge for that value through our market data, our connectivity, and our trading fees.
If you made this case to the Republicans at the SEC, their argument is that the case hasn't been made that you do these things. If you just gave that same answer to them, do you think they would have voted differently?
Well, I think that we have to recognize that the SEC is comprised of 5 commissioners, and including both Democrats and Republicans.
Yes.
And most of them are new. And so this debate we're having down in Washington right now allows those new commissioners to get a better understanding of how the markets work and making sure that they understand the facts that generate the facts behind these arguments.
Well, I said it sounded like price controls to the commissioner, and he said it's not price controls, it's competition controls where there is no competition, and it's monopolistic practices that they're addressing here.
Well, last time I checked, 20% market share does not constitute a monopoly. I think they also recognize
that for
Nasdaq or for any of the other exchanges. And I think that as a result,
15 different exchanges owned, 12 of them are owned by 3 different groups.
Right. So we have 4 exchange groups that compete with each other and 40 other dark pools that compete for the same order flow. Those 4, the only reason we have 3 exchanges is because the SEC does not allow us to segment customers. They don't allow us to have different types of market models within one exchange. So we are actually obligated, in order to give our customers choice, we have to launch different exchanges to create different market models. That's the only way the SEC allows us to offer choice to our clients.
Adena, one thing I kind of look at this, look, you want to call it a monopoly, you want to call it whatever it is, and I pointed this out to the commissioner. Is this a situation where I asked him, are you pushing for there to not be allowed to be charged for different data streams? Should all investors have the same access? Should you not be allowed to pay a higher price and get better information?
Yeah, so the first thing I would say is information is available to every single investor who wants to invest in our market. The average investor today pays nothing for market data. And when you then look at the retail brokers that serve them, they pay on average 17 cents per customer per month for the core data that they offer their customers. And then you say, well, gosh, but they also take data from us. And that is true. And we could add maybe another 3 to 5 cents per month per client for that. It's an incredibly cheap amount of data. And that's offering all of the same information and the same access that the professional investors have.
So what are professional investors willing to pay more for?
So recognize professional investors represent millions of investors themselves, right? So they're there to represent millions of retail investors. So we do pay them a little bit more. But if you look at
they do
top
pay you
5,
a little bit more,
right? So the top 5 banks generated $25 billion in equity trading revenue so far this year. The revenue that we generated from those banks for data and connectivity constituted less than 1/2% of that.
I guess my point is
very, very, very affordable.
The SEC isn't even trying to do this at this point, although the commissioner said it is an issue they're going to be looking at. Should you be allowed to charge more money for better, faster information? And I guess as a private company, you should. And I just wonder, where does the private company and where does the utility factor? And I'm coming at this from 2 minds, because I also want to know that our trades are safe and that you don't have to worry about a meltdown. I get that.
We are incredibly resilient on the back of all the innovation we've had. And the other thing is fast. Everyone gets access to fast data. The public feed, we have 16 microseconds of latency on our public feed and about the same, if not a little bit more, on our private feeds. So everyone's getting access to fast data, everyone. In terms of some clients, for competitive reasons, want to have more capacity when they come into the market, and we charge them for more. They basically want to be able to process a lot more orders as fast as they possibly can. They buy bigger pipes, and those bigger pipes will cost more money. But the fact is that that's allowing everyone to have the choices they need to be able to compete for themselves and to allow us to compete with all the other exchanges and dark pools that we have to compete with.
They make the public feed sound like it's a Commodore computer versus an iPhone 10 or something. And they're saying, did you hear Barnes and Commissioner
Yeah, and I have
Jackson,
a real
Barnes
problem
and,
with that.
The Barnes and Noble analogy, that, yeah, why would you? You're
Here's
like,
an analogy, by the way, for those
Barnes
who
and
aren't here.
Noble's controlling the library. Of course they put no books there. They want you to buy their books.
So,
right?
and I just want to say, we do a spectacular job of providing the technology behind that public feed. Again, it's 16 microseconds of latency. And we had 500 million messages go through that feed just last week in one day. So it is an incredibly resilient and an incredibly fast and high-speed feed. The same exact technology we use for our proprietary feeds, we use for the public feed. And so on the proprietary side, we just offer more choice. So there are different choices. You can have top of book, you can have depth of book. We make all of that extremely affordable to investors every single day. Just one other great fact is 2 weeks ago in one day, we processed 26 billion messages within the Nasdaq systems across equities and options. Our systems are incredibly resilient and incredibly strong, and that gives investors confidence that when they want to come and trade stock, they know that we're going to be here for them. That takes a lot of investment.
I don't know. I was asking him whether you just think that human nature causes, like, decent people to gouge on purpose. I guess that's not the real question. The real question is, in the pursuit of profits, in the pursuit of maximizing profits, do you need to be reined in by more competition to make sure that you don't do what you're supposed to do,
So I think the first thing is we are a public company and we're owned by investors and we serve investors. So we actually feel like we are actually entirely consistent in how we look at our behavior. We make sure that our investors get access to great information. We therefore then also make sure that our investors get access to a great company. And I think that that's really important to recognize, that being a public company does not mean that that we're suddenly not going to take care of the investors that we serve. We are incredibly client-focused and client-oriented, and that is, frankly, the product of a lot of companies.
I was just wondering what happened in the last couple of months, because the SEC attorney or judge. Okay, we got to go though.
Adena, thank you so much for being here. We appreciate your time, and
we
look
have
forward to an
GDP
update
numbers
on what's coming next.
Thank you very much.